Our last addressee from the banking sector, let me invite on the stage Harish Madaan, Director, Industrial and Commercial Bank of China. Harish would be giving us a talk on CBDC, Central Bank Digital Currency, and its impact on the Indian economy, achieving the efficient, safety, and convenient payment system. I would request Harish to restrict himself to maximum 10 minutes.
Hi, good morning, everyone. Uh, I'm Harish Madaan. As been introduced, I'm Director, Head Treasury. So I'm going to cover here topic which is central bank digital currencies and its impact on Indian economy. Now, from last couple of days, this conference where people talk about technologies, blockchains, digital currencies. So I'm not going to talk on technologies. I'm not a tech guy. I'm a banker. I talk on the economic impact of these digital currencies. To just start, give you a little background about the payments. Uh, so payment systems are at the core of economic development. It supports financial stability and helps in financial inclusions. So all central banks endeavor is to set up payment system which should be safe, secure, reliable, accessible, affordable, and efficient. Now, recently, with the emergence of technologies, discussion on digital currencies are taking center stage. These discussions are further fueled by falling faith in present payment system where banks act as intermediaries. Now, historically, commercial banks act as an intermediary for payments. A bank deposit, which is convertible into cash, makes current mode of settling transactions safe, attractive. So it also provides stability as deposit issued by banks under the license which is by the central banks. So this payment system, what we know is called as account-based payment system. Now the account-based system generally favors banks. Now how it favors banks? Banks have created the walled garden. They have created ecosystem around them, and then they are using information, account information, behavior information, and the low cost of funds, and provide host of services, and would make difficult for the users to move out of this. Now, so that is where, and that would helps the banks to increase profitability, like CASAs, and there are a lot of host of services that they offer. But the technology have transformed the financial markets and its intermediation activities. That is what we have discussed from last 2 days. With the development of new technologies like machine learning, artificial intelligence, and expansion of fintech, big tech companies in finance has accelerated digitalization. The digitalization of financial services, and adopter of digitalization perceive that it will bring a lot more efficiency and in payment processing as well as data processing. Hence, there is a need to think for a need to look at the alternative payment system which is more agile and efficient. Now here, before moving to the digital currency also, just give you first what is a currency when we're talking about. Currency is money is having an intrinsic value. It is acted as a medium of exchange and store value. Now money can be in the form of gold, which can be in the form of commodity, which is like gold, silver, or in the form of debt, which we call now as a currency. So currency is kind of debt instrument. It is liability of the issuer, and it is an asset who hold those currency notes. So that is what we call this. That is what is the currency notes are. So in modern time, the currencies are issued by the central banks. So we call these are the sovereign currencies that we talk about. But these are the debt instrument which having a claim on the resources of the countries. Now, moving to digital currencies. Now, digital currencies are similar to currency, only the form is different. Its form is digitally when it's issued, it's a digital currency. Whereas unlike the present form which we are seeing as a coin, notes, these are the physical currencies where the uses per se is same. Uh, uh, but with the advancement of technologies, but the private digital currencies are being issued and getting accepted by the people. Despite these currencies does not have any underlying, there's no issuer, these are publicly floated, distributed ledgers, there is no credible issuer of these currencies. So hence it carries a credit risk. We don't know whom to claim for if I have to, like in case of currencies, the central bank is there, the backing that I owe the debt. But in private digital currencies, there's nobody. So that carries a credit risk, and its wider acceptance can destabilize economic environment. So that is one of the threat from the private digital currencies. Now, since private digital currencies can be used as a conduit for money laundering, terrorism financing, governments and regulators across the world are keeping close eyes on its uses. Further, with the private digital currencies can make monetary action by the central banks ineffective. Central banks take monetary actions like increasing and decreasing the supply of money, as well as interest rate hikes depend on heating or overheating of economies, or to push for growth, they reduce interest rates. So all these actions will become ineffective. So that is where we need to think how to tackle this private digital currencies. That is where the talk has started about the central bank digital currencies. A central bank digital currency is a tender issued by the central bank in digital form. It is similar like a fiat currency in uses. In other words, CBDC is a sovereign currencies issued digitally. Now, what is the main objective of this for the CBDC? The issuance of CBDC is to mitigate threat posed by private digital currencies to economies. It will also help improve efficiency, reduce cost of payment of transaction by eliminating intermediation by banks, hence help economies to increase financial inclusion. Though CBDC will bring efficiency by reducing cost and time to execute payments, there are many concerns regarding design and structure of the money. Should it be centralized or decentralized? Would it disrupt the existing banking system? Would it impact monetary transmission? How would data be protected? If the cyber attack happens, what would be the continuity of payments? So there are a lot of issues, concerns regarding issuance of digital currencies. So I have put down some of those issues, and there are some impacts on the economy. Now there are positive impact as well as certain negative impact. Any technology it come with lot of changes, disruption is a positive, as well as it create existing disrupt existing setup. So it will take to stabilize. So it will help to make economy cashless. Now the government theme is to digitalize economies. So this is again a one step forward which would help for the cashless economy, wherein it will reduce the cash in the economy. Now at present the currency in circulation is almost like 20 lakh crore, which is circulating as a cash in the system. Now with the digital currency, if this cash come back to the system, now this cash will use to channelize and support growth, provide funding, because this fund will come into the system, and also formalize business activities which will enhance government revenue, and that revenue will use for the development activities. Along with that, will also improve India's fiscals, which is by reducing the fiscal deficit. Government would have money to spend. So that is where the cashless economy, it will help. Enhance financial inclusion. Now, financial inclusion, when we're talking about financial inclusion, means businesses an individual can access financial services at a reasonable cost. With the development of technologies, each reach to the corners of the countries at reasonable cost would be possible. Even though what we have seen with the technologies, a lot of disruptions and technologies reaching out, but with the digital reach of, with the issuance of digital currencies, this would further increase that. Without opening banking account, financial system can be accessed. That is where the private, other than bank, the new tech companies, fintech companies will compete with the banks, and that they will increase and increase the penetration of financial system to the rurals. Government programs to reach intended section of societies can be monitored with a specific coding intended use for currency by the beneficiaries. Government can also track that. These are the government announced schemes. So with those, that this fund should be utilized for those purposes. So that is also possible with the digital currencies. Improve monetary transmission. Now, private digital currencies disrupt monetary transmission. On the other hand, CBDC, central bank digital currencies, enhance the monetary transmission. Increased distillation of payment would reduce cash circulations and make monetary transmission effective. If the central bank issues currencies which are interest bearing. Now again, there is one more concept, is whether the CBDC would be interest bearing or non-interest bearing. If it's an interest bearing, then again the funds which are those funds, it would be a minimum ceiling. Though right now the RBI is issuing repo, reverse repo rates, but with the currency, this itself is an interest-bearing currency. So then the deposit holder, they will get benefit. But again, this is depending on the design and how it would be designed, and how it will, what would be the impact of this on the banking. Because if the interest-bearing is there, then it has an impact on the banking sector, which I'm going to enumerate further. Okay. And also, there is a no lower bound in economies where when the interest rate are falling, we say it's a zero. Zero is a lower bound. When the disinflationary scenario come, like in Europe, where the zero is come. But with this, the minus rates are also possible. So that is how it will again kickstart the economic cycle and help the economies to come out of the disinflationary scenario, like Japan is facing a lot from the long disinflationary scenario. Increase efficiency by incentivizing innovation and competition. So digital revolution is changing the payment landscape. Under CBDC, banks intermediation as a payment provider would be taken away. All transactions would be centralized. This will allow entry of new fintech player to compete with the legacy player like banks and card payment networks. And innovation and technology development would result into long-term improvements, and it will also avoid monopolization of payment providers. Protect the payment system from the rise of private digital currencies, which are again can be used as a conduit of illicit activities. So it is also would help to counter those, and which are actually a threat to the society as well as economy. Banking sector. On a banking sector, there are positive negatives. Negative in the sense is increase run on bank. If the bank is in some trouble, it will magnify. It will magnify the run, where with the click of button the funds can be transferred. So that is where the central bank has to come in to support the economies to provide liquidity. Increase cost of funds for the banks as the fintech player would be competing, and the CASA would reduce, the cost of funding for the banks would increase, and then in turn the credit lending would also increase. Cyber security again is a major concern. So that is again because it can disturb with the digitalization of economy. Cyber attacks are very real. That has to be controlled. Otherwise, it can paralyze the economy, and economy can be standstill, and it can disrupt many of even organizations also. Again, use of digital currencies for cross-border transmission. This would help, like nowadays where we are seeing that SWIFT is being used as a weapon. So with the digital currencies, that can also be overcome and would help for 24/7 fund transaction settlement, international settlement, and also override the SWIFT kind using this payment intermediaries as a tool, a weaponization of financial tools. So these are the some of the perspective. So in sum, I would say implementation of digital currencies will bring efficiencies in the payment system, but its impact on banking system need to be carefully weighed before designing the structure of the currency. Further, threat of cyber attacks are real. With the increase in digitalization, it can paralyze the economy. Hence, adequate safeguards needs to be taken. Thank you. Thank you very much.
Thank you, Harish. That was Harish Madaan from Bank of China. I would request Harish to stay here for a minute. Let me request Mr. Sumlesh Joshi, Deputy Director General of UIDI, to come on the stage and give a speaker memento to Harish, the last speaker from the banking conclave.